Most investors spend their time watching stock indexes, interest rates, and the latest headlines from Wall Street. But every so often, a market quietly begins to signal that something much larger may be developing beneath the surface. Silver may be doing exactly that right now. Not because of a social media frenzy, not because of a short squeeze, and not because of speculation alone, but because a unique combination of monetary pressure, industrial demand, geopolitical uncertainty, and structural supply constraints appears to be converging at the same time. Michael Oliver, known for his momentum-based market analysis, has repeatedly argued that silver's technical structure is far more powerful than most investors realize. Andy Schectman, one of the most respected voices in the precious metals industry, has spent years highlighting the disconnect between physical metal demand and the way investors typically view the market. The question isn't whether silver is important. The question is whether investors are paying attention before the rest of the world notices. Because while headlines focus on artificial intelligence, elections, debt ceilings, and central bank policy, few people understand the chain reaction that could be unfolding in one of the world's most strategically important metals. Silver sits at the crossroads of finance, technology, energy, defense, and industrial production. It is both a precious metal and an industrial metal. It is a store of value and a critical manufacturing input. And unlike many financial assets, silver has never gone to zero in thousands of years of recorded history. Here's what's really happening behind the headlines. We're going to examine why silver has suddenly returned to the attention of institutional investors, the hidden supply challenges emerging across global mining markets, the explosion in industrial demand, the lessons history provides, why sophisticated capital is watching closely, and what all of this could mean for ordinary people trying to preserve purchasing power in an increasingly uncertain world, because most investors are looking in the wrong place. And by the end of this analysis, you'll understand why silver may be preparing to do something that many market participants simply don't expect. The first thing to understand is that silver's story isn't really about silver alone. It's about the global system. Think of the global economy like a giant machine. Every component depends on energy, capital, raw materials, labor, technology, and confidence. When one part of the machine begins to experience stress, the effects eventually spread throughout the entire system. Here's what most people don't realize. The world is simultaneously facing record levels of government debt, persistent inflationary pressures, growing geopolitical tensions, energy transition requirements, and massive infrastructure investments linked to artificial intelligence and electrification. Each of these trends individually matters. Together, they create a very different environment than the one investors experienced during much of the previous decade. Financial markets often focus on quarterly earnings and short-term economic data, but major commodity cycles tend to develop over years, sometimes decades. By the time the average investor notices, much of the move has already occurred. This is one reason analysts like Michael Oliver and Andy Schectman continue emphasizing silver's strategic importance. They are not merely looking at daily price movements. They are examining the underlying forces driving supply, demand, and monetary behavior. And if you're interested in understanding the forces shaping precious metals and the global economy, consider subscribing. I post videos like this regularly. Now let's look at the supply side of the equation. Many investors assume that if silver prices rise, mining companies can simply produce more metal. In reality, the process is far more complicated. Imagine trying to fill a swimming pool while someone keeps turning off the hose. That's essentially what the mining industry faces today. Silver production depends heavily on mines located in countries such as Mexico, Peru, China, Russia, Chile, and Australia. Many silver ounces are produced as byproducts of copper, lead, zinc, and gold mining operations. That means silver supply often depends on economic decisions made for entirely different metals. At the same time, ore grades have generally declined over the past several decades. Mining companies must process more material to extract the same amount of metal. That increases costs. Energy costs remain a major factor as well. Mining is energy intensive. Diesel fuel, electricity, transportation, and equipment expenses all influence profitability. Add permitting delays, environmental regulations, labor shortages, political uncertainty, and rising capital costs, and you begin to understand why bringing new production online can take years, not months, years. This creates a structural challenge. Demand can increase rapidly. Supply usually cannot. And when markets encounter that mismatch, prices often become the balancing mechanism. The supply story becomes even more interesting when we examine what is happening on the demand side. Many people still think of silver primarily as jewelry, coins, or bars, but silver has become one of the most important industrial metals in the modern economy. Silver possesses exceptional electrical conductivity. It is essential in electronics, solar panels, advanced manufacturing, medical technologies, military systems, telecommunications infrastructure, and countless consumer products. Now consider the scale of the global energy transition. Solar installations continue expanding around the world. Electric vehicles require substantial quantities of silver-based components. Data centers supporting artificial intelligence consume enormous amounts of electrical infrastructure. Defense spending is increasing in numerous countries as geopolitical tensions rise. Every one of these trends requires metals, and silver occupies a unique position within that ecosystem. Unlike gold, which is primarily held as a monetary asset, much of the silver consumed industrially is dispersed into products and often becomes difficult or uneconomic to recover. In other words, a significant portion of silver demand results in metal leaving easily accessible inventories. This is one reason industry analysts continue monitoring silver deficits closely. The metal is increasingly being pulled in multiple directions at once. Investors want it. Industry needs it. Governments depend on technologies that require it. And if this analysis is helping you connect the dots, subscribe and join our growing community here at Precious Metals Alert. History provides another valuable perspective. History rarely repeats perfectly, but it often rhymes. During the inflationary period of the 1970s, precious metals attracted attention as confidence in fiat currencies weakened. During the financial crisis of 2008, investors sought assets outside the traditional banking system. During the pandemic disruptions of 2020, global supply chains demonstrated how fragile modern logistics networks can become. Each event was different, yet each revealed a common pattern. When uncertainty rises, markets begin reassessing risk. They start asking different questions. Questions about debt, questions about currency stability, questions about real assets, questions about scarcity. Silver's history contains numerous examples of dramatic revaluations when market conditions changed unexpectedly. That does not guarantee future performance, but it reminds us that commodity markets often remain quiet for extended periods before moving rapidly. Think about energy shocks. Think about supply disruptions. Think about moments when governments introduce extraordinary fiscal and monetary measures. These events frequently expose vulnerabilities that were already present beneath the surface. The silver market today appears to be facing several of those vulnerabilities simultaneously, and that is precisely why experienced market observers continue paying attention. Another reason silver has attracted growing interest is the behavior of sophisticated capital. Central banks around the world have been accumulating gold at historically elevated rates in recent years. While central banks themselves generally focus on gold rather than silver, their actions reveal a broader concern about monetary stability and reserve diversification. At the same time, global debt continues reaching extraordinary levels. Government deficits remain substantial across many developed economies. Interest expenses are rising. Currency competition is intensifying. BRICS nations continue discussing alternatives that could reduce dependence on the US dollar in certain areas of trade and settlement. Whether those efforts ultimately succeed or not, they signal a changing global landscape. Family offices, institutional investors, and wealth preservation specialists are increasingly examining how portfolios might perform during periods of inflation, currency debasement, or financial instability. Silver often enters those conversations because it combines monetary characteristics with industrial utility. It occupies a unique position that few other assets can replicate. Michael Oliver's work focuses heavily on momentum and structural market shifts. Andy Schectman's perspective emphasizes physical ownership and long-term monetary trends. Although their approaches differ, both arrive at a similar conclusion. Silver deserves attention, not because anyone can predict exact price targets, but because the underlying environment appears increasingly supportive of scarce, tangible assets. And if you're finding value in these deeper macro insights, consider subscribing because we cover the stories mainstream media often overlooks. So what does all of this mean for ordinary people? After all, most viewers are not hedge fund managers or institutional investors. They're individuals trying to protect savings, build retirement security, and navigate an increasingly complex economic environment. The first lesson is that purchasing power matters. Many people focus exclusively on the nominal value of their assets. But what ultimately matters is what those assets can buy. Inflation gradually erodes purchasing power. Debt accumulation can create long-term monetary pressures. Economic uncertainty can alter investment outcomes in ways many people do not anticipate. No one can predict the future with certainty. Anyone claiming otherwise should be viewed with skepticism. But understanding the forces at work allows people to prepare rather than react. That preparation does not require extreme decisions. It requires thoughtful diversification, long-term thinking, risk management, patience, education. Silver should not be viewed as a guaranteed path to wealth. Nothing is. Instead, it can be understood as one component within a broader strategy focused on resilience and optionality. The goal is not predicting every market move. The goal is building a portfolio capable of navigating multiple possible futures. And in a world facing rising debt, geopolitical uncertainty, technological transformation, and persistent inflationary pressures, that objective may be more important than ever. As we bring this analysis to a close, several themes become clear. Silver's story is far bigger than a single commodity. It reflects the intersection of monetary policy, industrial demand, geopolitical change, energy infrastructure, technological innovation, and wealth preservation. We examined the supply challenges confronting the mining industry. We explored the growing demand generated by solar energy, electrification, artificial intelligence, defense systems, and advanced manufacturing. We looked at historical examples showing how markets often react when uncertainty collides with scarcity, and we considered why sophisticated investors continue monitoring precious metals within the context of rising debt and evolving monetary systems. Will silver move exactly as some analysts expect? No one knows. Markets have a way of surprising both optimists and pessimists. But what we do know is this: supply constraints are real, demand trends are measurable, debt levels are historically significant, and geopolitical tensions continue reshaping global economic relationships. Markets move in cycles. Headlines come and go, but the laws of supply and demand never disappear. The investors who succeed over the long run are often the ones willing to study those forces before they become obvious to everyone else. So pay attention to the trends most people ignore, because sometimes the biggest opportunities emerge long before the crowd notices. If you found this analysis valuable, please like the video, subscribe to Precious Metals Alert, and share it with someone who wants to understand the changing world around us. Until next time, stay informed, stay prepared, and keep your eyes on the metals.